President Trump's recent comments about the U.S. economy, specifically his refusal to rule out a recession, well, it's really sent some shockwaves to the stock market. If you're interested in understanding how all these global events can actually shape your investments, well, hit that like button, subscribe for more deep dives like this one. We've seen major indexes like the Dow Jones, the S&P 500, they've tumbled, and the NASDAQ, especially the tech-heavy one, it's really taken a pretty significant hit. And a lot of this market anxiety seems to stem from frankly, from the uncertainty surrounding Trump's trade policies, specifically when it comes to tariffs. What's interesting is that the Magnificent Seven, as they're being called, those tech giants we've all come to know, Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, Tesla, they've all seen losses. And what's particularly fascinating is that Tesla's stock, well, it's really plummeted something like 12%, which actually wipes out all those gains that it had made since Trump was reelected back in November. So this raises kind of an important question. Are investors starting to lose confidence in the ability of these tech companies, to weather the potential storm of these trade disruptions? While some market analysts are attributing this downturn to a correction after a period of, maybe overinflated stock prices, it seems like what we're really seeing is a reaction to Trump's unpredictable tariff policies. Think about it this way. The market thrives on predictability, right? So when you suddenly introduce uncertainty, investors get nervous, of course. And Trump's threats of imposing tariffs on imports from countries like Canada, Mexico, and China, well, they've kept pretty much everyone on edge, even though he's offered some reprieves. The looming threat of these increased tariffs on Chinese goods, and a hefty 25% tariff on all steel and aluminum imports, well, that's really spooked the market. It's the constant back and forth and the speculation, the lack of clarity really on what the administration is actually trying to achieve with all of this. It just creates this atmosphere of unease. Businesses just don't know how to plan. Investors don't know where to put their money. And consumers are just, left wondering if prices are going to suddenly skyrocket. And it's not just tariffs that are contributing to all of this economic uncertainty. We're also seeing some, worrying signs in the broader economy. Layoffs are increasing, hiring is slowing down, consumer confidence is waning, and inflation is, it's creeping upwards. All of these factors combined have led some analysts to start ringing the alarm bells about a potential recession. The Atlanta Federal Reserve, for example, they actually predicted a contraction of negative 2.8% in the first quarter. Now, to really understand this, you need to talk about GDP, or gross domestic product, which is essentially, it's a measure of the total value of goods and services that are produced in a country. So a contraction means that the economy is actually shrinking, and 2 consecutive quarters of negative GDP growth, well, that's one of those classic signs of a recession. And along with the Atlanta Fed, other institutions like Goldman Sachs and JP Morgan, they've increased their recession probability forecast to 20% and 35% respectively. So it's very clear that there's a lot of nervousness out there about the future of the U.S. economy. But here's where it gets interesting. Not everyone is convinced that a recession is inevitable. Commerce Secretary Howard Lutnick, for instance, he's confidently asserted that there's, quote, no chance, unquote, of an economic decline in America. He believes that the U.S. economy is fundamentally strong and that any kind of slowdown will be temporary. And this difference of opinion really highlights the current state of flux in the economic landscape. Experts and policymakers alike, they're struggling to really understand the potential fallout from these trade tensions and predict, really, where the U.S. economy is headed. The debate over whether a recession is looming or whether the U.S. can actually weather the storm, well, it rages on, and we'll delve deeper into this debate in the next part of our deep dive. But before we move on, if you're finding this exploration of economic uncertainty insightful, don't forget to hit that like button and subscribe to our channel for more in-depth analyses of these complex issues. So when we talk about a recession, what actually defined it? I mean, traditionally, it's been marked by those 2 consecutive quarters of negative GDP growth. But the National Bureau of Economic Research, the NBER, they're the official body that actually calls recessions, and they take kind of a broader view. They consider other factors like employment numbers, industrial production, consumer spending. They're really looking for a significant decline across the board that lasts more than just a few months. And the current economic landscape, well, it's a bit of a mixed bag, really. Some indicators like that Atlanta Fed prediction of a contraction, well, they definitely raise some concerns. But other data points paint kind of a different picture. For instance, consumer spending that remains pretty robust, and unemployment rates are still low, which suggests continued economic strength. So this makes predicting a recession with any certainty, well, pretty difficult, to be honest. It's almost like trying to forecast the weather weeks in advance. There are just so many variables at play. And the length of this period of, investor caution and uncertainty, it really hinges on how these global trade tensions evolve and whether those fears of recession actually subside. I mean, if the trade disputes escalate and that uncertainty persists, well, businesses and consumers might, tighten their purse strings. They might reduce their spending and investment, and that could potentially, tip the economy into a recession. On the other hand, if trade tensions cool down and businesses start to regain their confidence, well, the economy might just maintain its growth trajectory, even if it's, at a slightly slower pace. But the market's reaction to President Trump's comments and these ongoing trade tensions, they really underscore how interconnected the global economy truly is. I mean, financial markets, they're incredibly sensitive to any kind of political and economic uncertainty. Investors they're very carefully monitoring all the developments in this trade situation and how the U.S. economy responds to these challenges. Economic data releases, things like monthly inflation figures, are becoming crucial barometers of the economy's health. If inflation remains, stubbornly high, the Federal Reserve, they might have to raise interest rates more aggressively. And while that can help, curb inflation, it could also potentially slow down economic growth. Which brings us to, this crucial issue of inflation. Rising inflation, it erodes purchasing power, right? It makes goods and services more expensive. Consumers might start cutting back on their spending, and businesses might face higher costs, which squeezes their profit margins. So this situation really underscores the need for diversification in investment portfolios. Investors should really consider, a mix of assets, things like stocks, bonds, and alternative investment, to kind of spread the risk during these times of economic uncertainty. It's kind of like that saying, don't put all your eggs in one basket. If one asset class takes a hit, well, the others can help cushion the blow. And staying informed about, economic developments and policy changes, that's also critical for making, smart investment decisions. Knowledge is power, especially when you're trying to navigate these uncertain economic waters. So this period of economic uncertainty fueled by these trade tensions and this market volatility, it presents both risks and opportunities. And understanding the forces at play, carefully assessing the risks and the potential rewards, well, that's really the key to navigating this complex economic landscape. This current economic climate, it presents a really unique challenge. It requires a deep understanding of these global dynamics, policy shifts, and how markets respond to all of this. And this period of economic uncertainty, driven by trade tensions, these market fluctuations, well, it has the potential to reshape the future economic landscape. But how exactly will this all play out? I mean, will these challenges lead to, a fundamental restructuring of global trade, or will the economy kind of adapt and continue on this growth trajectory? These are the questions that that we need to really grapple with as we navigate this complex and ever-changing economic environment. And remember, staying informed, that's key to making sound decisions, both in our financial lives and as participants in this global economy. So if you enjoyed this deep dive into economic uncertainty, don't forget to hit that like button and subscribe to our channel for more insightful explorations of these pressing issues. Until next time, stay curious.